Okay, I'm going to share the screen here and go through a PowerPoint.
Okay.
Um, it's basically a presentation. Let me get it started up here. What I want to do is quickly just go over the PRO and PROX, what we call done-for-you income plans that we're offering at Wallstreet Winning. So the goal is we publish stock and option data that really allows an investor to experience a positive result and consistently generate monthly income. So we're in the business of publishing. We do that by a lot of means in the sense of data analysis and application of a lot of algorithms and so forth. So, but the basic thing is, how do we do it? By using the what to buy and when to buy information that we publish daily at Wallstreet Winning. It's based on trade technology that I developed over the last 20 years. So very well been used by many people on basically a PC platform application that I delivered for over 15 years as a software investment tool. Take that trade technology and now put it on the web. So who am I? Ron Groenke. Well, I have a bachelor's degree in mathematics. I developed lots of systems and programs for production, distribution, and warehouse at General Mills. But in general, I used my math capabilities for optimizing systems. So the key is optimizing, and it takes a lot of modeling and so forth. I developed software, communication software for Apollo 7 and 8. And way back, long time ago, but in those years, it was significant in the sense of the resources we had available. So it was a major, major task. I also worked on some top secret communication protocols for the CIA and the Army Marine Corps, doing high-level graphics in 1974 when they were taking all those pictures by U-2s, and the CIA needed to get them out in the field. In other words, they had real pictures. They were not videos at that time. So it was a way that we were able to transmit them. I invented the NCR Content Communications Networking System while at NCR Content. It's basically a packet-based pre-internet system, build private communication networks for major corporations. At NCR, I was one of 12 NCR Lord Award winners, and I'm the author of 5 books on investing and Envision's investing tools software, and I've licensed that trade technology to Wallstreet Winning. So,
excellent.
Now there's Apollo 8. I worked on Apollo 7 and 8, basically the communications at Houston. With Sperry Univac had the contract for terminating the communications from all the tracking stations. And we presented the data to 5 IBM mainframes that drove all the displays, all the big displays on the back room, and all the terminals sitting on everybody's desk. So a major, major task. Very exciting time. So monthly income option strategy. Okay, how do we do this? Well, we buy a stock and sell an at the money or slightly out of the money call option. We also will sell a put at a strike price below the current market price with a low probability of assignment. So we're always looking for that channel where a stock is trading in so that we can take on a trade, buy some, sell a call to get some premium, get a return, maybe get called out. The goal is to get called out, but also to gather more premium by selling a put. And the key is our record to date where puts expire over 95% of the time. In other words, we're picking those stocks where it's been an opportunity to be very successful with that. And what's the outlook? We expect the stock to trade in a channel such that the call is assigned and the put expires worthless. So that's the kind of the strategy we're using in our selection based on the information that we can get from.
Can I stop real quick there, Ron?
Sure.
I got the audio set up, but I think I accidentally hit this edit and draw thing that's created a red mark to the screen.
Wow. Okay.
Hang tight just a second here. I apologize, guys.
I don't know if I can I don't want to jump back out. It's probably on.
What I'm trying to do
Oh,
is,
there it is. It's gone.
stop this. See that video there? I'm trying to stop
gone.
that.
Okay.
Take just a second. Stop video.
That's a pretty cool feature. I didn't know we can draw on the presentation.
Yeah. Sorry about that. It's cool if you guys could draw, not me. But all right, go ahead.
We don't want to complicate it.
Thanks, guys.
So what is the expected return? Basically, if the call and put expire, it's the premium we got for the call and put. And if the call is assigned, the return is the call and put premium plus any price appreciation. So we get opportunity in some cases to actually also have some appreciation. And we're only allocating funds to buy the stock to sell the call. So in a lot of accounts, margin accounts, the put premium basically is covered with margin and really doesn't cost much to do that. In fact, it's zero unless you get assigned. So we're using free money. If the call expires and put is assigned, then we sell calls each week until called up. So in other words, we're picking those stocks that those companies we do not mind owning because they have good fundamentals. So we'll take that additional asset on and we'll sell calls and manage the exit on that particular position. So what is the risk? Well, like anything else, the risk is related to stock ownership. And this is where it's been a big misnomer by a lot of investors. They're told options are very risky, stay away. The real reason or the real fact is if you buy a stock and sell a call, you've reduced your risk by the amount of premium you got. Okay, so that's something a lot of people don't understand. But so that the premium we're getting in does reduce our risk, and our break even goes down because we now can reduce our purchase price by those options we receive. So that's very important. We also may do protective puts on some equities that have high betas to mitigate some risk when appropriate. In other words, if we feel that this particular equity does have a higher level of risk, then we'll take on some more protection. So done for you plan, the Pro basically is $10,000 a month. And what is this? This plan is a model portfolio, of 10 or more equities that we're managing. And the goal is we want to generate $10,000 a week off of that portfolio. So an asset base up to $1 million. So we're going to employ the asset to generate that return. We may not be 100% invested because we're always looking for new opportunities. So maybe we're 90 or 80% invested. And if we have opportunities during the week, we'll either go into them, or on the weekend we publish opportunities every week. So always want to have some, I'll call it firepower available to take on a new opportunity.
And Ron, just if I can stop you for a minute, because I think Ron kind of glazed over a couple points. And that's when Ron put that he was a NASA mathematician and did the mathematics for the Apollo and things like that. He also did the mathematics for the 3 algorithms we use here. So all of the opportunities that we give in the Pro, which basically, they all come from his algorithms. We have a monthly algorithm, we have a weekly algorithm, and then we also have our options algorithm that were all designed by Ron in his software that he spoke about. So all of these opportunities come out of that really signify and find the best time to buy a stock. Now, this Pro package in particular is one where we give you the opportunities. This isn't the managed one. Ron's going to talk to you about that in a minute, just to make that totally clear for you.
Right. So we're publishing for you to trade in your account. Okay. And so we're managing this portfolio. You can see the results here. Last week we had a little over $12,000 income. Our weekly average is 12,700. The goal is 10,000. So we already have, I'll call it reserve, if you want to call it that, to meet the 10,000 per week goal. So we're always looking at managing the assets to generate to at least 10,000 a week if possible.
And Kevin, those are real numbers. Those are the actual results from last week.
Gotcha.
And we verify everything. All of our trades are on the website. So we do list all of the trades open and all the trades completed.
Okay.
Yeah, we can, yeah. So that's the pro. You do the execution in your account, and the opportunities that we're publishing in the trades open are based to basically invest an asset base up to $1 million. Okay, so that's where we're managing.
Obviously, to receive the optimal return on this, and the reason it's pro is because there's so many trades that it is more for professionals. So it's more for people who are brokers and need some help with their own products to invest their customers' money. That's why we call it pro, because it's obviously $1 million or more. And then we move on to the Pro X, where it's fully managed, right. Where all you have to do, the only job in the Pro X is to really move the cash from the account.
You guys handle everything else
on a weekly basis. And that's fully managed by Chris Hood, he's the actual account manager, and he manages the lower account representatives. He's a former Barclays banker. And basically what he does is he manages the accounts the way that the bank manages your money for the bank. So when you go to the bank and you deposit, let's say somebody was to go deposit $1 million there, you'd be lucky if you get a 1% interest, while they take your money and they invest it in options and strategies like this, and they make 50 or 100%. You know,
sure.
So we're just basically using a banker, a former banker, using Ron and his NASA technology to get. Because if you know options, and Ron will tell you, I mean, we only are selling options here, so we're not buying options. So when he spoke about the reduced risk, it's the selling of options, which 85% of the time they expire worthless, and we get that premium. So that's a very good position to be in when you win 85% of the time. Now, when we put Ron's math, which he's very humble about, when we put that on top of it, it moves our success rate up to 96%. So from 85 to 96, that's a very nice margin of, especially when we're dealing with bigger dollars, that adds up very quickly.
Right. And in the event that, an option is exercised, you take the measures to either hang on to it and like you were saying, Ron, is sell calls, or depending on which side.
If it's exercised, that's 100% success.
Mm-hmm.
In other words, if the call is assigned, the put's going to expire, right? Because it's trading above the call price. I mean,
right.
Our put price is always below where we're getting in. The feeling is if you have $100,000, and this has been based on all the stuff I've written about and worked on and tried to teach people, is why invest $100,000 in something up front? Why not invest 50, put a call on it, get a little appreciation, and then use the other 50, to do a put? Because if the stock goes down, you've now reduced your entry point on the total, and you have a better chance of succeeding. If the stock goes up, nice, you got maybe some appreciation with the call premium. You also got that put premium, it came along with it.
Sure.
Because you reduced your risk, and the opportunity to do this, especially now, is, 3 years ago, there were no weekly options. There were monthly. And you back up 10 years, and there were options every 3 months. So things have changed significantly over the last couple of years. So with weekly options, and the other thing is actually most companies, at least in the Dow 30, they all have weekly options. Plus, most of them have dollar increments in their strike prices. So you could fine tune the trade, significantly every week to take advantage of that amount of, that time premium up front. Every short time going out to expiration has the highest value premium.
Let me ask you this. Obviously, there's always two sides of the coin. So there's someone losing 85% of the time, or in this case, 96% of the time.
We love those.
Are these mostly, big firms that are hedging, their portfolios or their money? Because, no one's going to want to lose that much. And
well, they're kind of
when they lose that much. It's it's institutions that are buying and selling, right?
That's what I
thought. A lot of them are buying options on the call side. They feel
just trying to hit home runs. We're going for singles and doubles over time, and we go for smaller chunks over a long period of time. where they go to try to hit a home run and get, $100,000 in one trade. And if they do 10 or 20 trades, they might win 1 out of the 20 or 1 out of the 10 and come out ahead. Chances are they won't. We go for, thousands on a trade over time, and we add up those thousands.
Sure.
And that's where we really take money to the bank. So we're just banking money on a weekly basis. And the way we can do some of the married puts, and when we do the timeouts, especially in the PROX packages, we can reduce the risk to where you have an 85% chance. So you have an 85% return, okay? We're shooting for an 85% return. And with the insurance that we put on it, at the worst case, you're either going to get 85% return or you're going to get 30% return. That's just an example stock that we were doing last week. But many of those cases are to where, not that it's impossible to lose, because anything could happen. Sure, the stock market could all go to zero on one day. Very unlikely, but something like that in theory could happen. But in the way that we do this, and we're very methodical about the numbers, and they're gone over by Ron, who's a mathematician and also a banker. They're mindful of all the opportunities on a daily basis. We mine for what we call diamonds, which are stocks that are in a prime space to buy, and options that are giving very unique amounts of premium or anomalies in premium at a certain period in time. When we put those two together, because we mine so much data, I mean, we're mining 6,000 stocks every night in real time. Then from those 6,000 stocks, we're mining all the option chains of the ones that are in a buy cycle. So we're just taking advantage of the data that's there and finding the diamonds.
Sure. Now, how difficult? I've never traded options myself, and for my father-in-law, my father, my uncle, who also lives on Marco Island. I don't know if you. I don't think you've met him, Adam. Can you guys hear me?
Yeah, we're opening a new office on Marco Island. We're actually opening a store, and we're going to be doing a live trading session every Tuesday. So you're more than welcome. It's probably going to open next month. It's between the Subway sandwiches. On Boulevard there. It's right next to Subway sandwiches. And we're going to be open there with an office where we're going to do some live trading. So he can come in and we're going to do sessions on a week.
Because it's not too difficult. I mean, the way I understand it is you guys provide the trades if you subscribe to this, correct? And if it's not, managed by your banker, you place the trades. It's not extremely difficult to place these options.
No, right. In fact, trades. I got an example up. These are two. There's.
I see that. Yeah.
Big 7 opportunities were published on Sunday. Well, Monday the market was closed, but they were available. So here's a couple. I think I got another page here, right? So I got 5 of them. But the first one, is UCO. This is. Once we publish a trade, this panel is dynamic. In other words, it's based on the market price as it's changing. So this was today at 12:48. This happened to be the price of UCO, trading at 22.23. And the algorithm that's being used, first of all, UCO was selected last weekend because it came up as a buy based on the algorithm for when is a good time to get into a stock, and UCO also has good fundamentals. So it passed the fundamental test, and it came up as a buy. So it's published then as an opportunity, and today they're at 12.48. The price was 22.23. The system now goes and looks at the option chain, looks at all the options available, and does what we call a risk-reward calculation. Which is the best call to write right now if I go out to next 3/3, which is next week Friday, okay? It said that basically the $22 call, you get 68 cents and the 21.50 put. So if you did that one, you would get 1.7% in 9 days.
Mm-hmm. I see what you're saying. So
you can see right away, that's over 1% a week, right? And think about if you had $1 million, that's $10,000 already at 1%. And this is, 1.7%.
No, that makes sense.
So the structure is in the brokerage account, you buy the stock, sell the call, sell the put. You wait till 3/3 for the next event. So the call,
UCO is the ProShares ETF, right?
Right. UCO is 2X oil.
Do you guys do a lot of ETFs?
We do a lot of ETFs.
Okay.
Do a lot of
like
ETFs
that.
for both premium opportunity, for I'll call it diversification,
I'm just looking on my phone here as
Yep.
well.
large volume, which is, we like to trade the people that, stuff that other people are trading. So we're not into, to exotic stocks that don't have a very big market. I mean, part of the
Sure.
fundamentals is we need at least 1 million shares a day being traded, okay?
Right.
So high volume, a very, followed by many, many organizations.
Right.
So that gives you flexibility. We've never been in a situation where we couldn't sell a call or a put. I mean,
Okay.
the market is so dynamic that, there's always opportunity to sell that because we're in those equities that have a large market.
Do you ever see that changing, where there's not going to be that availability, or
No,
anticipate that changing?
it's gone up significantly, at least in my experience from doing this for almost 30 years. So
Right.
Kevin,
3 months to months to weekly.
You got to
Yeah,
think about this. If they went from quarterly options to monthly options
monthly
to
to
weekly
weekly.
options, just wait for daily options.
Now
It's
look at UCO. It has 50-cent increments
Mhm.
on the strike price. Same thing with TBT. TBT is the interest is the 20-year inverse. So this thing goes up when interest rates go up, right? What do you think is
Sure.
going to happen? What's the Fed going to do?
Yeah,
Probably move interest rates up, right?
right. I don't anticipate a huge move in the near future, but there's nowhere really
but
downward to
look
go.
at
So
this guy is trading between 40 and 38.50. So that's right on, right at the spot there, 39.50, getting 1.5% in 9 days. So that's a nice opportunity. Very stable. This thing is not going to go down and it's going to go up a little bit once the Fed, notches up another quarter point. So
sure.
we got some upside there. Here's 3 more. RH, I think that's Restoration Hardware. Look at that return, 5% in 9 days.
Cool.
Right here, it picked the 26.50 call because based on the premium and the direction of what's happening with the stock, again, it's a weekly, goes out to the 3rd. So it's, again, that short time frame.
Yeah, that's nice.
TMUS, same thing there, 50-cent increments going out right at the money on the call, 1.6%, and then URI has a higher stock price. So I think here we're probably at $1 increment for sure. But there we're a little bit out of the money. And then the put is at 122. So there it's about, a little over 2%. So this is an example of things that were published on this last weekend. And this is dynamic now because today is the 23rd. And if you did this, there really is not enough available to sell a call for tomorrow unless you know something. You have some inside information on something.
Right.
Yeah, I know there's going to be an announcement. You would buy a whole bunch of calls or puts if you know it's going to go in the other direction. So,
absolutely.
But one thing
that's kind of example of that. Now, opportunities. Okay, let me just show you. Here is the first little page of the opportunities published this morning. In other words, this becomes available every night, probably at 1 a.m. Eastern time, sometimes earlier, depending upon how many stocks have to be crunched. And the algorithm takes about 10 minutes per equity on a Intel i7 processor. So the algorithm is very, I'll call it, computation intensive to come up with when is it the right time to buy. So these are all buy opportunities that were published, and they're sorted basically on the success rate, 5 at the top, and as you go down the bottom, you'll see it kind of narrows to 4, and you can see the target APR. In other words, what's the annual percent return if you follow the algorithm, buy, sell, buy, sell. So this thing is sorted in that sort of, so the best ones, the highest return opportunities are at the top. And you probably even know some of these companies
Sure.
that are on this list. So this list is, once this buy is issued, now the next state, okay, that this stock is in, it'll be in a hold state until the system, the algorithm says sell. And it's going to sell based on a gain or sell on a loss, depending upon where the price is. And that'll happen sometime in the future. It goes down the road a ways. So,
Sure.
So this list is the one that's, everybody has access to. And, you can sort and, change this list or look at it in many different ways. So that's basically a quick synopsis. And let me just back up to the PROX again here. And by the way,
So
this is on the website. We publish the performance every week, so everybody gets to see exactly what we're at. In fact, these are the numbers that you saw on the previous page on the PROX.
Is there a plan where you can subscribe and pay either a fee or a percentage of gains if you're not either at the million threshold or want the PROX?
Yeah.
Pro or PROX?
Yeah, there's no percentage of fees. We have a basics plan, and that's for people with under $50,000. So you don't have to be a millionaire to get in here, but you get access to our data. And if you want the done-for-you trades, you pay $2.99 a month for that. And then we have another one where we give weeklies, and it's called the Plus, and that's $14.99 a month. So it's $1,500 a month. That's for people with $100,000 to $400,000. But once you hit over $500,000, you need to move up to the Pro or the PROX, because it's not going to work any other way.
And then tell me again, I know we briefly talked about this a couple weeks ago, Adam, when I was in town. In the Pro and the PROX, actually, it was, what was the cut per month? Because that wasn't a percentage, right? It was a dollar amount.
It's a dollar amount. I'll send that over to you in email.
Great.
Yeah.
Well, this is really good. Ron, I got to ask you, because you kind of sound like my uncle. Your accent sounds like my uncle who lives on the island. Where are you originally from?
Minnesota.
I was going to say it had to have been either Minnesota
Midwest.
or South Dakota. My uncle is from South Dakota. I actually grew up in Minnesota myself. I grew up in Rochester, Minnesota, which I tell people is the worst part of the state because we're not near any good wilderness or lakes. So
and you have the cold weather. So.
Yeah, my parents are still there. My dad's a radiologist at Mayo, so that's what.
Oh wow! Okay.
And
right.
But no, I was like, I wonder if he's a Midwestern guy. So I need to get you in touch with my uncle. His name is Tom Lean. He lives on the island there.
Tom, what's the last name again?
Lean, L-I-E-N. Really good guy. And he lives on the island from November till probably the end of April.
Oh, okay.
Still runs a few businesses up in South Dakota, but really good guy. And I'm not sure, I'm guessing he would like this. But if nothing else, he's just a good guy to talk to. And,
Kevin, the PROX, do you want to take up, Ron, want to put up the next page real quick, that the actual results from these are published every week.
Okay.
Those are the real results last week for $1 million. It's $40,000, almost $41,000 was made last week. So anybody in the world would love that. Okay.
Okay.
And we have our clients literally sending us, I think I sent you a copy of the email, sending us, it almost seems too good to be true, because their job is to pull this $41,000 out of the account and move it to their cash account. And, of course, every week we don't make $41,000. We had a great week last week. But the possibility of that on $1 million sitting in any other asset, you're not going to make $41,000 on real estate on a weekly basis. You're not going to make $10,000. You're not going to make anywhere near that amount on $1 million in real estate.
So what's the target? I know last year was kind of a grand slam year for you guys. Are you shooting for around the 50% mark every year, 48%, somewhere around there? Or in PROX, it looks like it's more around the 60%.
Yeah, the target for PROX is around 50, and we're quite happy if we do $10,000 a month.
Sure.
Sorry, $10,000 a week.
Right. In varying markets.
The other thing to be aware of is, okay, on PROX, it's doing trades in your account. Okay, so we don't take anybody's money. Number one.
Right. I like
and number two is we ask that you actually move the income out of the account. In other words, the goal is we're going to manage $1 million and we're going to invest that and have it throw off 10, 15,000 a week, and you put that in another account.
Okay.
We don't want to fool anybody and fool ourselves saying, well, you still have $1 million after 6 months. No, we have $1 million asset that we're managing, and it's going to throw off 10,000 a week. You put in a different account.
Gotcha.
You get to decide then what to do with that. You maybe
we don't manage more than $1 million. So it's the price for the PROX is per $1 million. So
right.
If we make you in the first month, or as we did in the first month and a half in the PROX, if we make you 140,000, we're still going to manage $1 million. You have to take your 140,000 out, and we're not going to manage that. You understand?
Gotcha. Nope. It's not, there's no drip program in this.
No. Well, you want to keep them separate just because we're always trying to manage that 1 million, and you always want to keep 1 million in your account because it can get very confusing in what's going on with your account, and people then they overestimate or underestimate their gains, and they say, well, they don't have a real grasp of how things are being managed. And we try to be super transparent with everything we do. So we have reports on a weekly basis. Here's how much you need to withdraw on a quarterly basis. The accountant spends something so you can rectify with your CPA and pay your perceived taxes.
Estimated tax.
Yeah, exactly.
Right.
So,
yeah, because that was another question I had. I'm 99% sure I know the answer to this, but all the income or premiums received is just ordinary income, correct? There's no tax.
Ordinary income, unless we have a holding, that we hold over 12 months.
Sure.
Then it becomes long term, and all the premiums that went with that become long term. But that's not going to happen very often.
And in months that either are tough months, there's nothing owed unless there's a gain over a certain amount, and Adam, I know you're going to send me that. I'm not, asking for number.
No, we basically, it's, we charge 15,000 a month. And if we don't make the 15 back for you, okay, that month's free.
we said,
and so basically at the beginning of each month, each client gives you 15,000.
At the beginning of the quarter, they give us 45.
45. Okay. And if for some reason, and I know it's not happened, but you got to ask.
Yeah.
If you don't make 45, you make 46. The client sees 1,000. You make 100. The client sees 55,000. If you don't
make 100,000 in 100 days, your next 100 days is free.
Okay.
It's
I think I understand. Yep. No, that makes sense.
And we set the bar kind of low on that, Kevin. So I'm just telling you, we do that because people say, 100,000 in 100 days? No way. And that for us is, we did that in 31 trading days, I believe.
Mm-hmm. Gotcha.
So, yeah.
In a really bad market, down, everything's fallen.
No problem.
Did you guys have something in place right now that, obviously, certain types of options are going to work in that environment. You're going to pick up premiums a lot.
Ron's been through all the down cycles. He's been through .com. I can send you his numbers in .com. He was still making how many percent a month? I think 4% a month in the .com, and that was when there was only
3% for the whole year. Those years, 2-3% taking income off. But now we have a lot more. I'll call it instruments. There are a lot of inverses.
Sure.
The system will, in fact, tell us about getting into the inverse indexes. So we're tracking SQQQ or TQQQ. And when that system says buy SQQQ, it's because the market has started to turn.
Sure.
Okay, so that thing goes up and the market goes down. The same thing on the S&P 500 index, the Dow, and there are the other inverses in energy, gold, silver, natural gas. A lot of the commodities you'll see, the UCO is a commodity, right? TBT is an interest rate sensitive. So it's not just pure equities. The system finds those, I'll call it equities, that make sense right now and have the right entry point.
Yeah, they're all opportunities. So in any kind of market, even in the down market, especially with the inverses, there's opportunity abound. So
sure.
When the system says there's an opportunity, we analyze it, and our analysts all look at it. We have a 3 eyes principle. So on everything we do, we have 3 eyes on everything, looking to make sure that that's the right trade to make, and it's going to produce the results that we want to do. and then if all three eyes agree, then we go and make the trade.
Sure. So that was the pro plan we were discussing with the 45,000 a quarter, or was that PROX?
PROX.
PROX, yeah.
Okay.
Pro is basically you see all the opportunities we're publishing for that the PROX client or the PROX manager is executing.
Okay.
Right. So it's basically you have to do the executions. You have to manage it. Okay.
It's a full-time job, Kevin.
It's
So
you know.
if you have nothing else to do except manage trades all day and you know enough that you can do it well, we give you the information. You can do it for $10,000, or you can pay $5,000 more and get 20 to 25% more return. I mean, last week was 12,000. The PROX did 40,000. So do the math.
And so, pardon me if I missed it, but what's the difference in return? It's both based off of a million, right? Someone else is doing the trading for you in PROX. How much?
There's a lot of differences. And
Okay.
it's in the trading style and the strategy. So in the pro,
Okay.
it's a basic, we give you the opportunity once a week. In the PROX, you have a live real manager who's managing the trades on a daily basis, who's actually looking hourly at these trades. He works 6 days a week on your behalf, finding the most premium, finding the best opportunity, and setting up the exact right.
Okay.
Right.
So it's not the same trades. It's a whole lot more.
It's a whole lot more. One of the other things is it's allocation of quantity, and I'll call it is the pro by itself. What we're publishing is, I'll call it the most conservative trades that we can put on. Okay, even more conservative
Sure.
when we actually are managing the pro. We don't want to, I'll say, put risk on a lot of people saying, well, I'm following the pro and everything is going against me. Okay.
Mm-hmm.
So we're trying to be as, I'll call it, conservative as possible, where in the active managed account, he's a little more aggressive and he's putting on maybe some, buying some puts to a married put to cover a little higher risk. He may take bigger quantities and so forth. So
they're not custodying any money. They just have access to the account and place
access to the account. You can do the trade.
Gotcha.
Right.
Yeah, that's big. I think, that's what kind of led me towards, wanting to learn more about this, because in the Bernie Madoff days,
That's right.
I think people are a little worried about actually giving their money to someone else.
That's right. And that's why I think this,
And Kevin, in this scenario, you can log into your own account. If you don't like the trade, you can stop it.
Sure.
It's
do you guys know the name Jim Fink? He runs a similar program, I think, Investing Daily. He similar type of option strategy. Anyway, it's not a big deal. I just listened to about a 20-minute spiel, and it was just a little link that I clicked on that it sounded a lot like this, which doesn't surprise me. I mean, it's obviously lucrative and given results. So, people that know the numbers and know how to do it, sounds good to me. So would be wise to ask, or maybe the people I'd be sending this link to might wonder that, we could kind of ask right now, just out in the open and answer. Or...
Yeah. I mean,
well, we didn't spend a lot of time on the, call it the underlying trade technology. I mean, we got videos galore. Goes into a lot of detail. The question is, how much detail do they want?
Sure.
Some people always get nervous and say, well, I really want to have a better understanding of how you do that.
Arrange meetings. We can arrange, presentations. The number one thing is that they feel comfortable with what they're doing, because that's the first step. The second thing is, just the results. I mean, that they speak for themselves. It's beautiful. It's really beautiful, beautiful, Kevin. That are going to be around for a long time. So your risk automatically, Coca-Cola, Pepsi, Home Depot. We have like a lot of the big names that are in our stock picks that that the computer draws up as an opportunity. So you're pretty secure in what happens, and we haven't found anybody else that, let's say, plays the way that Ron plays, at least on the level of the data that we have, because we run a lot of processing power. We process a lot of stuff, and that's the real value to anybody. is the data that we have. So
Sure.
keep that in mind.
Has there ever been a month or a stretch of months that you've been down or negative?
This year, no.
How about 2015? How did that look?